4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A short video today to give you some insight into some simple concepts that we repeat and look for every single week. Now, we've been focusing on the higher time frames, explaining the importance of hunting setups, and then being able to identify instruments that are giving us signals on the day that can go onto our watch list, and then monitoring how they set up into our session. So several traders, obviously, from different parts of the world are trading the Asian session. Other traders are trading the London session. Other traders are focused on the New York session. Some traders are trading a couple of those sessions combined because of the time zone that they are in. Now, we've talked about this simple phrase, markets only do 3 things. And I repeat that a lot of traders do not understand the importance of that. They actually don't understand the mechanical approach of using that to your advantage and targeting instruments that are repeating the same behaviors over and over again, and giving us the same setups over and over again. Not the same instrument, the same setups. And that's what's fundamental to understand. We're hunting, or I am hunting, the same setups. So predicting, reading markets, all these other things are not in my interest. It's the same setup over and over and over again. It's just whether or not I get the setup in the New York session. So today we'll demonstrate examples of the signal and then the setup coming in Asia, show an example of the signal and then the setup coming in London, and then we'll show an example of the signal and the setup coming in the New York session. Instrument is irrelevant. The signal is what's important. Now, just in simple terms, if you understand where markets are at, regardless of what market you're following, if you're following your favorite instrument or if you're following 3 or 4, regardless of the session that you're trading, a market will either break out on the day. That means it's been in consolidation when the day starts, meaning that the day itself is still inside of a previous day's range. The market opens up, it starts trading. You could be trading London, you could be trading New York, you could be trading Asia. It breaks out on the day. And coming back to a fundamental understanding, most breakouts fail. Now, if we understand our weekly templates, Monday, Tuesday, Wednesday, day 1, day 2, day 3. On the front side of a week, Wednesday resets heading into the back side of the week, day 1, day 2, day 3. A really simple concept. Opening range, day 2 typically expands the range. Wednesday's the midpoint range of the week and the reset. I will look for range reversals on a day 2 on the backside on a Thursday. But if I can't find that and the only signal that I'm getting is an instrument setting up for a range expansion in a trend trade, well, I'm going to be looking at how that sets up into my session as well. And Friday, of course, is the closing range of the week. And then we have week 1 in a new month, week 2, front side of the month. After week 2, we head into the back side of the month, week 3 and week 4, the closing range of the month. We went through that yesterday in terms of understanding the monthly cycle, open, high, low, close, open, low, high, close. But a really key thing to understand is that if markets only do 3 things, that means they're either, number 1, inside, just in consolidation, whether you're on a daily chart. So we can be looking at an instrument, and as the day's trading, we're inside of the entire range all day. It's in consolidation. I don't care if traders want to trade the high and the low and catch the move and everything else. It's inside of the previous day's high and low. Now, I spoke about I'm looking for trade setups that come specifically from the levels. The smallest time frame that I am hunting setups on, the smallest time frame, let me repeat this, is the daily chart. Now, if we're inside, this becomes a signal day to me. I'm not interested in catching a move because it's my favorite instrument. I'm looking for the rinse and repeat setup that I'm hunting every single week regardless of the instrument. Now I can have an instrument give me a signal, like the British pound. It gives me a signal. I come to the screen the next morning. The British pound, the London session is in the middle of the night for me. I come to the screen the next day. I've got the British pound on my watch list, but lo and behold, the trade has already happened in the London window in this particular case. So London got the trade. Now I got a signal day. The market's broken out on the day. It's reversed and exploded vertically back in the other direction and given the London traders the setup that I'm hunting, except that the London session got the trade. I can have an instrument that is on my watch list. I come to the New York window and lo and behold, it's broken out on the day and given me the New York session reversal trade, a market that was in consolidation but had given a signal to be put on a watch list. And on the day itself, it's broken out of consolidation and reversed and closed at the extreme, virtually back at the high of the previous day's range, a reversal setup in the New York session. We can have markets that are in breakout on the daily time frame that go into consolidation and are inside. We have markets that break out on the day that were in consolidation on the daily time frame. Let's just review the understanding of that. We have a market that has traded from the high of day, high of week level back to the breakout of the high of day level, level to level. We have a market on the British pound that broke out on the day and reversed, putting in a new low of day level, trading back through the high of the current day and continuing into the close. A market that has gone from level that became lower back through a high of day level, and as we talk about in these particular situations, having a projected range expansion as a profit target, a 100% expansion of the range, level to level. Now we talked about the master pattern yesterday. My good friend Steven, the dump, coil, and pump, or in his particular case, the trap and shift, same pattern, different directions, same behavior. Market that breaks out, pumps, engulfs, coils, and dumps. Remember, I'm looking at the smallest time frame is the daily high and low. The question, what setup are you hunting? On any instrument, we have traders who are trying to trade a market as it breaks out or because it's broken out. But do you have a setup? And that's what's fundamentally important. We have instruments that will give us signals, whether it's on the day, at the close of the day. An example of an Asian session instrument, the Japanese yen, goes on our watch list. It's closed in breakouts at the end of the day. Asia got the trade. Now I come to my New York screen. The market has already given the trade. Now this is one of the things I want to explain to traders is that once the market has gone vertical, that's the trade to me. Now, I had traders trying to trade instruments later in the day, and as I talked about, we go back into consolidation, and they're saying, yeah, but it was a lower low and a lower high, and my response to that is this. The smallest time frame that I am working from is the daily time frame. The daily time frame. So that means I'm working from a daily level. It's already closed in breakout. It's gone down and tapped. Some traders said, yeah, but it didn't break out. It's already in breakout. We have an opportunity in the Asian session for the explosive reversal trade. That's the trades I'm hunting, the explosive ones. Now, if Asia gets the trade, it's off my list. I'm not looking for anything else now. That was the trade. If London gets the trade, then London gets the trade. But if I get the setup in the New York window, then that means this instrument is allowing us to have the New York session opportunity for a trade setup. Now, this is a Monday, the opening range in a new week. When you're going through your instruments, number one, you can be looking at instruments that possibly have closed in breakout, because now we got the daily time frame involved. The daily time frame is closed in breakout, and if that's the smallest time frame that I'm trading from, I'm looking for signals from the higher time frame. Hence the videos that we've gone over in detail on understanding the monthly cycle. And as I've talked about from the playbook, all these signals come from the daily time frame, the daily charts. So if somebody's teaching you how to trade these moves inside, they don't understand what these setups are. if you get one nugget from this video, I want you to understand I'm trading on the smallest time frame of the daily chart. That's the smallest time frame. I'm using smaller time frames to enter into those trades, whether they're reversal or trend trades. Now, we went over an example of yesterday where on the smaller time frame it's a reversal, but we're in a trend on the higher time frame. So traders have got to get away from the idea that just because something's up high or down low that we're trying to counter trend it. Now, we're going to have opportunities where setups look like we're counter trending again at the high of the day in the New York session, the instrument that is on our watch list, even though it's closed in range. Because if we back this chart up, we know that this market has been in breakout since the beginning of the week. It's been in breakout on the higher time frame, the daily chart. The daily chart is already in breakout. On our smaller time frame, we're in consolidation, but then we break out on the day and engulf. There's only two patterns essentially really that will show up at reversal extremes in most cases, but we have an engulfment on the 15-minute time frame, which on a higher time frame becomes a pin bar just prior to 10 a.m. press conference release, an example of where they'll use the news, smoke and mirrors, as a catalyst to complete the move. We have volume trapped inside of the consolidation in a market that is already in breakout on the higher time frame, and then it breaks out again on the day right into our timing window for the explosive continuation trade with the higher time frame trend. What are we talking about? We're talking about markets only do three things, but if we work backwards and understand if you're trading your favorite instrument or are you hunting instruments that are giving you signals, and then do those signals set up into your session. If it's already left the station, the trade's gone. I'm looking at the next instrument because I want the setup in my session. I'm not looking to counter trend something because it moved. Trade inside of the consolidation. The smallest time frame that I'm working from are the daily high and low of day levels. So if we have markets that are on explosive breakouts, traders are saying 3 days of breakout, traders, why didn't it set up? But we're still in breakout. Let the market give you a signal. As I've said yesterday, if we follow this market up, at no point has it given a low of day break. We're still trading higher highs and higher lows. We're not trying to catch the high. We're waiting for the market to set up and give us a signal, just like it did on the way down. Lower highs, lower lows. And then we got a signal day, an inside day that gave traders an instrument to put on their watch list because the inside day is a signal day. Page 69 in the playbook. Now, this was a Fed day, and so traders have an option to either, number one, take this as a session trade, as I talked about. I can do a 100% expansion of the high-low consolidation from Asia, or they can take this trade with the thesis that now we may be reversing back to the high of day level, except that we had a Fed day. So in this particular case, as the timing window gets into our U.S. session, potentially locking in the maximum amount on this trade, regardless if it was continuing or not, because on Fed, obviously, at any point, they still could have came back and spiked before going up, and I would lock in the money. But signal day, and then does it set up, and which session gets the opportunity? Now, some traders might have been looking for low-hanging fruit in the New York window, except that we had the Fed. Again, I won't trade in front of the major red news, and I do not trade the Fed release. Regardless whether you can make money and catch moves or not, where is my setup? I go from level to level, and in this particular case, the signal set up for Asia to get the trade. And we have the Mexican peso just a few weeks ago. An example again, we're on Tuesday, a market that closed in breakout at the end of our Monday opening range session. It gave us the opportunity for a reversal trade in the New York session, a beautiful pump, coil, and dump, or trap and shift, as my friend Steven would say. But it closed in breakout, bringing it up on our watch list, putting instruments on a watch list, and then checking them the next day. Which ones set up into the timing window? Again, what was the signal? It closed in breakout. If most breakouts fail, we may have an opportunity for a setup. Market dumps down in the London window before pumping back up to the high of day and high of the current week, and breaking down, and then our 10 a.m. club getting the continuation vertical blow off back to where the pump began. So what I'm encouraging traders to do is to focus on the process. If you fall in love with the process will love you back. The instrument is irrelevant. We've gone through examples of the same setups on indexes, metals, energies, and currencies. But it's important to understand one final thing as well. You only need 2 or 3 of these a week to significantly compound your trading account, which is why I will just keep encouraging traders to get away from reading tea leaves and all the little garbage matrix inside. Focus on opportunities that give you asymmetrical risk reward as a potential target, and then does that instrument set up into your timing window in the session that you're trading. If you're trading your favorite instrument, get one thing clear. You are going to get caught trying to trade markets on days where there's very little edge. And I would rather hunt setups that rinse and repeat where I have an edge over and over again on any instrument. Hunt the setup, not the instrument. Master the setup. Master yourself. Sit on your hands in between. Don't engage in degenerate gambling type of trading. 50-50 at best, or 30-70 at best. I know there's people out there that will try and show you how to trade movement. Movement is not a setup. That's called getting lucky. And you might get rewarded for getting lucky and bad behavior. But at some point, that can catch up with you. Whereas if you're hunting the same setups over and over again and doing nothing else in between, what can stop you? There's only one thing, and that's looking at you in the mirror. And as my friend Steven says, round kick, round kick, round kick. One kick 10,000 times and scale it up in size. Keep it simple. Stay away from the matrix. Stay away from the fugazi. Stay away from all the gobbledygook inside. And may the markets go with you. Have a great day, traders.